Let's see his line. Okay, are we live? I hope we're live. Holy cow, we are live. We're on YouTube. We're here. Whew, that was exciting. Anyway, sorry for the delay, everybody. Having some technical gremlins, but we are here. What's up? Spencer Israel, Ian Cully. This is What the FICC. And today we're talking about the US dollar, Ian, because it's ripping. It can't stop, won't stop. I mean, it's down today a little bit, but I mean, the dollar is on fuego. What gives?
Well, there's obviously a lot of demand for the dollar. And, the thing is, if the dollar continues to rise, that's going to put pressure on risk assets worldwide. And it's important. The dollar's always important, but it's been really important these past 5 or 6 years.
All right. So that I knew we started a little bit late, so we will hopefully go a little bit late today, past noon. I know we have a lot of charts, more than normal. I don't know if we'll get to all of these, but let's just start with, I guess chart number 1 is a good place to start. And let's just set the stage for where things stand with the dollar right now, and then we'll try to drill into this thing.
Yeah, absolutely. I just want to, before we get into the dollar and the levels it's challenging right now, I wanted to hit on why. Why should we care about the dollar? And this is it right here, these first few charts. This is a dollar index overlaid with the MSCI All Country World Index, global risk assets. You see a strong negative correlation. Dollar higher, stocks, global risk assets lower, right? That's why we're paying attention to the dollar. Now, take the US out of the mix. Now, this is ACWX is this ETF. This is the All Country World Index ex-US. And it's just a little bit stronger negative correlation, right? But still same story. Now, not all risk assets are created equally. So when we talk about commodities, what's really been interesting about this cycle, or this part of the current cycle, is that commodities have remained buoyant despite a strengthening dollar. And that's when we've seen that since late 2021 and into the past couple of years, past year and a half. The reason for that was a strong positive correlation between the dollar and interest rates. Commodities, inflationary assets, they do well in rising rate environments. And we're looking at the CRB index, predominantly crude oil. And crude oil does really well when rates rise, right? Not all commodities do, though. When we look at gold, gold does not like a stronger dollar. So as long as the dollar and rates are continuing to rise in tandem, which is really that's been the case for the past year and a half, gold will likely struggle. Now, getting to the dollar and the dollar index, that's challenging fresh year-to-date highs, right? This is the top pane here. In the center pane, we have our G10 currency index, all the same components of the US dollar index DXY, but we add a few more. The Aussie dollar, the New Zealand dollar, and the Norwegian krona, all commodity-centric currencies, all more risk-on currencies. And when you add those few, we're already getting a breakout to new year-to-date highs for the dollar against that index. And when we look at the lower pane, we have our US dollar AD line. Now, level not as important as the trend. And the broad trend for the US dollar, when we include, all those emerging market currencies, which I will get to towards the end of the slide deck here, it's higher. It's higher. So let's go ahead and start getting down to it. Spencer, here we go. This is that G10 currency index I was just mentioning. Failed breakdown last year when the dollar peaked. The dollar index peaked back in late September. Got a failed breakdown in this index. Ripped higher, consolidated for about a year, and is now resolving lower from that consolidation. That speaks to dollar strength. And here's a zoomed in look at that US, the dollar AD line, big base breakout, 2022, another consolidation, and it is continuing to rise. So what's the big deal with the dollar? What's going on? Well, we got a failed breakdown earlier this year, and it has been ripping higher.
This is a long-term chart, though. This is super long.
This is a long-term chart, but that 102, kind of 101, 150 in that area, it coincides with a key retracement level, and it also highlights two peaks, the 2016 and the 2020 peak. So the market's telling us this is a critical level. Now, dollar index broke below that level in mid-July and has been ripping higher since. And what I mean by ripping higher since, 9 consecutive up weeks. Right? Dollar hasn't done that since 2014. And what's interesting, when we go back and look at momentum thrusts of this magnitude, they not only tend to lead to further strength, but they tend to come in pairs. Saw these two pairs here in 2016 and 2015. And then again, in late 2021, when that rally really started to kick off. And then again in 2022, when the Fed began to hike. So the question is, hey, is this recent momentum thrust just the beginning? Just the beginning? Potentially, but dollar index needs to decisively break back above 105.50. Why 105.50? Because the market has proven that is a critical level. There's a lot of supply coming in here. What's interesting is on the way up last year, it paused. Ran into some resistance. At that point, no idea that this was going to turn out to be a key retracement level or a significant level of supply. But it's interesting how markets react like that. Anyways, 105.50 back above there. And risk assets are probably in trouble. They're probably experiencing more pressure, not just in the US, but worldwide. Not necessarily a problem, again, for energy or commodities more broadly, but something that we want to keep in mind, especially as US dollar index challenging this level in the past week or two, posted a bullish overbought reading here on the 14-day RSI. So I was thinking, now that we've kind of run through the index, our custom G10 currency index in the AD line, go ahead and run through the 6 components of the US dollar index DXY, highlight some of those other currencies, and then rip through some emerging market currencies and see what we're seeing more broadly.
Yeah, that's cool. And we should do that. But just before we do, I just want to reiterate your point that this is a headwind for the stock market.
Yes.
So if the dollar is going to be strong, if it's going to break, if it either stays up here or even breaks above the 105 level that you said, this means that it would be hard for most US stocks, broadly speaking, to go higher, for the indexes to go higher, right? And we've spoken about how we're in no man's land, how we've gone sideways now for a period of time. The indexes don't quite know what to do. It's been sort of messy, and that would continue to be the case, most likely. You're saying if the dollar keeps doing what it's doing.
Yes, absolutely. But to be clear, at the index level.
Of course.
At the index level.
Obviously, on any given day, any stock can do anything. But broadly speaking, at the index level, it would be hard for and the index level is just another way of saying most stocks, right? Most stocks, most of the time. It would be hard for them to really have a significant move higher with the dollar doing this.
Right. And what's interesting is to just or I think beneficial is to just go back and look at last year. when the dollar index was catching higher, it was still in that parabolic advance. What was going on then? The dollar and rates were rising in tandem, and that's what we're seeing today. Now, if
Ouch.
this relationship remains intact, and if both of these continue to catch higher, if the dollar is above 105.50, 105, then we're most likely in a similar scenario than we were then. And if you recall, energy did extremely well, and we're seeing energy do really well now. And I imagine, again, like if the dollar breaks above that 105.50 level, then stocks sideways to lower at the index level, while energy continues to outperform and take on a leadership role.
Okay, so
that's what I
yeah.
say.
Yeah. All right. So then let's start taking a look at the dollar as it relates to other global currencies, because these pairs can basically determine, just as the dollar sort of, can determine, the direction in U.S. stocks. The dollar compared to global currencies can really determine the performance of those global markets as well. So let's take a look at the components
Absolutely.
of the DXY. Which slide are we on? We're looking at.
So, to your point, if there's any one currency pair or dollar pair that that's going to have the most impact on the dollar index, this is it. It's the euro. 57.6% of the US dollar index. Here we have a zoomed out chart highlighting that 103.50 level, a critical level of former support. Euro broke below there last year, hit parity for the first time, and well below parity in ages, it seems. Reclaimed that level and has been forming, a sort of wedge channel, whatever you want to call it. It's breaking out of that. It's breaking lower. It's breaking down from that consolidation. I'm watching this 106.75 level, a decisive breakdown there. And, dollar index is probably above 105. And, I'm targeting 103.50. I'm looking for a move back to this critical level of former support. For here's another chart of the euro. I want to briefly just go over RSI. I've been getting a lot of questions about bullish and bearish regimes. How to know when to use the 14-day RSI as confirmation of a breakout versus when to use it in more of a mean reversion way, or to complement a mean reversion strategy. And there's no really cut and dry answer to that. It's, none of these indicators, whether we're talking about the 14 period RSI or MACD or any other momentum indicator, are foolproof. There's a lot of art into reading these indicators, just as there's art involved in charting. It's not a science. So we can spend an entire episode on momentum, which I think we should, Spencer. I think we should. But okay. I just wanted to highlight in the downtrend last year, where you can have a trending market while the 14-period RSI can signal excellent areas and points to short this this downtrend as it hits the upper bounds of its range. That's just one example. We can go more in depth into it, and we will later. Just wanted to highlight that. US dollar yen, 13.6% of the dollar index. Now it's breaking back above this key extension level from this multi-year base. Broke above that level briefly last year and found support at another key extension level. I like it when a market is responding to these levels. It adds conviction. I like the yen long above 147. Yes, it's a large component of the dollar index, but I almost, the yen has been so weak, not just against the dollar, but against the pound, against the euro, against the Canadian dollar, the Aussie dollar. I don't necessarily like to give it too much weight in terms of where the dollar index is actually going to go, because the others, it can do its own thing, even though it's a large weighting. The pound, though, the pound is still stuck beneath a decade-long, 15-year-long downtrend line. Now, it ran into that level around 103.50, which also coincide with a key pivot low from early 2022. That was our target earlier this year when we were buying the pound. Resistance came in, supply came in, sellers showed up, drove prices lower. Now we're looking at a possible breakdown in the pound. So here's those December 20, actually early December 21 pivot lows around 131.50. Now, if it's below 124.25, I like the pound short, right? I like it short back towards 118.50, back towards these pivot lows from earlier this year. And if the pound's falling, the euro's probably falling, and the dollar index is catching higher. Moving on to the Canadian dollar, which is really interesting, is the Canadian dollar.
So just to be clear, like generally speaking, all of these currency pairs should be going down. I'm sorry, to rephrase. The currency pairs with the dollar in the denominator should be going down.
Correct.
Okay.
Right. So now we're looking at the Canadian dollar, and we'll also look at the Swedish krona, and actually I flipped it and I used the Swiss franc futures just to outline a certain level on the chart that I really thought was important. But yes, so in this scenario now where the dollar is in the numerator, a breakout above 136.50 in the US dollar CAD pair, that speaks to dollar strength. That would support a breakout in the dollar above 105. But what's interesting is we're not seeing that. We're seeing weakness in the euro. We're seeing weakness in the pound. We're seeing weakness in the Swiss franc. We're seeing weakness in the Swedish krona. But we're not seeing weakness in the Canadian dollar. And I think a lot of that has to do with oil, commodities. Commodity-centric currencies are tend to do. They're tending to hold up, and they're more resilient versus the dollar than some of the other more developed market currencies. Now, that was a common theme that we experienced last year, and we're starting to experience that theme again. JC shared an excellent chart in the conference call earlier this week. Again, here, CEW, emerging market currencies, and the Canadian dollar holding up the best versus these other DXY pairs, the Swiss franc, the euro, the pound, of course, the yen. But the Aussie dollar, another major commodity currency, is really taking a hit. I think that has a lot to do with the lackluster performance from base metals, just metals in general. And also, its major trading partner is China, and China has really been struggling economically. So Canada, commodity-centric currencies holding up much better than these other dollar pairs. And then moving on to the Swedish krona. Now, the dollar Swedish krona hit all-time highs. Hit all-time highs last year, and now it's challenging those former all-time highs. So dollar breaking out to all-time highs versus was 4.2% of the US dollar index.
Do you know what's driving this trend, or you don't really care?
What's driving this trend?
For the
most part, what's been driving this trend has been the hiking cycle. So a lot of this really, the accelerated strength in the U.S. dollar really kicked off the spring 2022, late March, early April. So interest rate differentials, right? So interest rate differentials are a major fundamental factor into into, yeah, and so's trade. But that interest rate differential has really been the driving force since the Fed policy shift. Here's a zoomed in look of the US dollar Swedish krona breakout above 1150. We're heading up back towards 12 and a quarter potentially. It's a nice looking base, but hey, are we going to get that bullish momentum print? Looking for a bullish momentum print for confirmation. That's a 14-day RSI reading above 70. Now with the Swiss franc, I use the futures. The dollar pair has the US dollar in the numerator. But I use the futures because I wanted to highlight this failed base breakout. It was a monster decade-long inverted head and shoulders that failed to hold. So, I mean, path, and it's definitely been ripping, falling apart here, sliding lower. I say ripping, sliding lower. So, another feather in the hat, Spencer, for US dollar bulls. Now, moving on to a couple currencies that aren't in the US dollar index, but we include in our G10 currency index, the Aussie, again, stuck beneath a multi-year down trend line, breaking below a key pivot low from last year, recently printed fresh 52-week lows. As long as it's below 64.50, I think path of least resistance is lower towards those 2022 lows. New Zealand dollar, same story. Another commodity currency. I look at these two currencies as high beta. If you want to get a little juice in the FX market and bet on a stronger dollar, you can do it with the euro, of course. But the New Zealand and the Australian dollars will give you that additional beta, if that's what you're looking for. Below 59, let's call it 60, and the path of least resistance is lower for the New Zealand dollar back towards 55.50 in those 2022 lows. Now moving on to Asia, a couple of currencies out of Asia. We have the US dollar, Korean won, pressing up against this key extension level. Got a little whipsaw late last month, but it's, it's
what was that about?
And, just volatility. It's trying,
Right.
Buyers are trying to take it out. But here's the thing. I mean, this is a constructive looking base, right? And that's the big takeaway here, is that the dollar's looking strong against the number one component of the US dollar index, the number two component of the US dollar index, which, I mean, it's the poor yen, and the third component of the US dollar index, right? So that's right there is, 70+% of the dollar index. And then when we look outside of DXY, we're getting a very similar picture, right? Singapore dollar also looking strong, or Singapore dollar pair looking strong, dollar breaking out of a multi-month basing formation. As long as it's above 136, path of least resistance up towards 139.25. And then CEW.
Yeah, see, this is the big one to me. This is the big one because this is the one that we can actually trade. Most people can actually trade.
Yeah, and what's interesting about CEW here is that it has violated this multi-year downtrend line. And again, whenever we see that happen, Spencer, it's not necessarily a buy signal; it's a heads up that there could be a potential trend reversal underway. When we zoom in, failed breakout, maybe a premature breakout, never hit overbought, supporting the breakout in July as the dollar index bottomed as CEW failed to hold above this 17, 18 level. As long as it's above that, below that level, I mean, the path of least resistance is sideways to lower. Sideways to lower. But as you can just see, in the chart, it's still holding up pretty well. It's still holding up pretty well. And a lot of that has to do with emerging market currencies coming out of Latin America.
We got a few
Really,
charts. We got a few charts for that as well.
yes, yes, absolutely. So Mexican peso, this, in 2022, what currency was carving out? Well, this would be a bottom. What currency was the dollar breaking down against in 2022?
Yeah,
Not many.
I thought the peso
Not
was.
many.
I thought the peso was. The peso was strong. Mexico, like Mexican stocks were, I thought, doing quite well.
Absolutely, absolutely.
Yeah.
So I think we need to continue to look at Mexican stocks. We need to continue to look to the peso for an opportunity in terms of betting against a stronger dollar. And as you can see here, nice strong downtrend line. It was in a bearish regime. Now it broke out of that, but ran right into that downtrend line and is falling lower here. So Mexican peso continues to remain strong against the dollar. The Brazilian real trading at the lower bounds of a multi-year range back near the 2020 lows. So dollar can't seem to get it done against the real. It can't get it done against the Mexican peso. It can't get it done against the Colombian peso, printing fresh 52-week lows. That is what is creating this resilience here in CEW and emerging market currencies. We're seeing it here, right? This is Latin America. This is why CEW is only down to 2.25% since the dollar bottomed in July. But if we look elsewhere, it's not the story yet. Dollar pressing towards new all-time highs against the Indian rupee. We get decisive close above 83.5. I like targeting 86.50. South African rand hit all-time highs earlier this year. Wrote a post. If you wanted to bet on a stronger dollar, South African rand was the way to do it. It broke out, hit our target. Excellent trade. Now the Chilean peso, dollar's trying to break above a critical level, that 878 level, trying to hold above that. It's in a bullish regime. Here, the Indonesia rupiah, trying to get it done here. The Filipino peso, dollar gaining against the peso on a bullish momentum regime. Thai baht, dollar run into a logical level of potential resistance around 36.5, 36.25. See if it breaks above there. That would definitely be another constructive data point for dollar bulls. Vietnamese dong, dollar ripping against the dong. So Asian currencies are weak versus the dollar. And Malaysian ringgit. So we're seeing a lot of weakness in Asia. We're seeing a lot of weakness in developed European currencies, and a lot of strength out of a handful of Latin American currencies, which is really interesting. I think that speaks to the commodity super cycle and just where we want to be looking outside of the U.S. for potential opportunities like Mexican equities or Latin American equities.
Ian, I want to turn our attention to the chat quickly before we sign off here. A couple comments from Jonathan. Isn't the fact that precious metals are hanging in there tipping off that maybe the dollar is toppy, or that the inverse relationship is breaking down?
I don't think I don't look at the precious metals as evidence of the next directional move for the dollar, or that the dollar is at is going to catch lower. I just see that as an underlying demand for precious metals. I think it's like extremely constructive for precious metals. I see precious metal probably rolling over here. I think gold's going to have a really hard time if the dollar and rates rise. I think the dollar, I think gold can continue to rise if in a rising rate environment. I just think it's gonna be really difficult if the dollar's catching higher as well.
Okay. From one hole, isn't the dollar strong in part due to how the U.S. central bank is saying how they're willing to hike and disregard other currencies and markets, and that's the same reason why the pound and the euro are weaker. You agree with that? Yeah, that's
absolutely. I think that's what really kicked off this explosive rally last year in the dollar, and the fact that the Fed's been signaling that they're willing to continue to raise rates. Definitely 100%. I agree.
We'll find out maybe a little bit in a couple hours how strong that signal really is. Brass up. Do you think the 10-year is going to keep going higher? We're at like a 16-year high in the US 10-year. Last time it was this high, I was in high school. Do you think it'll keep going higher?
You know what? I have no idea which direction it's headed in. But based on the charts right now, that's the direction I'm leaning.
Okay.
I'm leaning higher for rates, lower for bonds. One of the reasons I really like energy. I mean, energy charts on their own are giving me plenty of reasons to want to buy them. But they're also outperforming their alternatives, and they're doing that in an environment where rates continue to rise, which is extremely conducive for energy.
All right, and then before we sign off, just this comment from David Strong. He goes, "So stocks are doomed?" ? That's not really what Ian is saying. I think I don't want to put words in your mouth, Ian. I think mostly you're saying that it's a question of like, if you have bullish on one side, bearish on the other, and you list all the arguments for each, right? And you're saying, well, what's more likely to happen? I think what you're saying, you can correct me if I'm wrong, I think what you're saying is that it's more likely that if the dollar, and if the Fed keeps hiking and the dollar keeps rising and yields, then stocks are not going to go up, right? That's the most likely scenario.
At the index level, yes. So, the way things are starting to shape up, it looks a lot like last year. It looks a lot like
specify which part of last year.
Spring.
Okay.
Spring, summer of last year.
Okay.
It's beginning to look like last year. So I don't think we're going to get a sell-off like we experienced last year at in the S&P, but I think it's sideways to lower. And running through all of these currency charts, DXY components, some of the commodity-centric currencies that aren't in that index, and then looking at a lot of emerging market currencies, the evidence is overwhelmingly strong for a rising dollar. And that's the direction I want to err in. I can't really get behind that again until the dollar index decisively closes above 105, 105.50. If and when it does, then I think stocks are going to struggle. Stocks are going to struggle at the index level, aside from energy. And there's going to be lots of opportunity. That's the thing. There's going to be lots of opportunities to buy individual names in certain areas of the stock market, even though the indexes are likely catching lower.
Yep. Okay.
That's important.
All right, that's a good place for us to stop. We went very long today, but we started late and we had a lot to cover. So we'll be back on Friday. We have a special guest on Friday's show, so stay tuned for that. We'll be talking about commodities because besides the dollar and rates, what else is there to talk about? It's commodities, Ian.
Yes.
This is like your time to shine. The stock market is boring. The crypto market is boring. Nothing is happening. It's all the action is in bonds and commodities. So we'll be talking to a special guest on Friday's show. So stay tuned for that. And that's all we got. Any final thoughts, Ian?
Just have a great week, and I'll see you on Friday.
All right. Catch Ian's blog, link in the chat, hit our description. Thumbs up, like us, do all that good YouTube stuff. And like Ian said, we'll catch you guys on Friday.
Thanks for watching.